Welcome back, everybody. So today we are going to be discussing markets and my thoughts on where we currently are, talking about price action from last week, what things are going on this week in terms of economic data, obviously company data in the next couple of weeks as well. Now, just for starters, it's currently 3:15 a.m. in the morning where I currently am, but I really want to kind of document my thoughts, and I do apologize if I am all over the place. I mean, as soon as I've recorded this, I will be editing it and uploading it straight away. So again, I don't know how the edit is going to be. So anyway, I do apologize. But anyway, let's pretty much get straight into it. So on Friday, I was basically highlighting that there was a lot of interesting things happening on Friday, and I think it was worthwhile to kind of talk about. Now, I just want to say I am very thankful for a lot of people who engaged with that post on Instagram, because it's kind of been probably the first time I've posted something like that, what was a little bit more in depth. And as a result, I got about 500,000 views on that post. Now, I was basically just highlighting the price action, and that was that the S&P 500 was down, NASDAQ was down, the dollar was down, what was very, very interesting. The yields were down, gold up, the VIX, the volatility index, was up by about 13%. Bitcoin dominance was up slightly, and Bitcoin was down. Now, first of all, I was getting a few messages, obviously, in relation to Bitcoin. Now, people were asking me, why has Bitcoin gone down? Because everyone thinks it's a store of value, like digital gold and a store of value. We should see Bitcoin starting to go up. Now, the reason why you want to be looking at Bitcoin dominance is because typically the same way how people look at the dollar in relation to other currencies, people should be looking at Bitcoin in relation to other crypto assets. So typically where a lot of people sell, there's a lot of selling pressure. Typically you have people who go to a flight to safety, right? And this is the thing. What was interesting on Friday is because people were not rushing to the dollar. The dollar was going down and gold was going up. Now, just in relation to Bitcoin, a lot of crypto assets were bleeding heavily back into Bitcoin. So obviously you can see that as a good thing for Bitcoin just in general. But also as well, what you've got to kind of consider is that there's a lot of people who are on different types of journeys in terms of understanding and assessing different types of digital assets. And there's a lot of people who really, really, really understand Bitcoin's use case from a sovereignty point of view, and all the rest of it, right? But you have people who just trade Bitcoin based on volatility and price. Now, obviously, if in a risk-on environment, a lot of people would just buy Bitcoin because it's risk-on, and if in a risk-off environment, they would just buy Bitcoin. They would just sell Bitcoin, sorry, as a result. So, again, you've just got to take these things how they come. And I think a lot of, let's say, older investors see Bitcoin as a very risky speculative asset, and obviously they just sell it as soon as there is a risk-off environment, because obviously they're anticipating the anticipation of others, and a lot of people would sell because it's a risk-off environment. Now, the reason why I was kind of highlighting this on Friday is because it was basically just in relation to the actual dollar, because the dollar was going down. Now, typically, like I was saying, when you see, let's say, equities start to sell off, you typically see the dollar go up, or it basically gets a little bit of a bid, because a lot of people are going back to safety, back to cash, and obviously that wasn't happening on Friday. And I think that kind of signals, to me anyway, that there could be potentially a deeper structural issues in the economy and in the markets. Now, I do think that this is all on purpose, and I'll link to a video what I did a couple of weeks ago here. But basically, the executive summary is that I really do think that this is all intentional, because I know that Trump throws his weight around, right, in terms of tariffs and blah, 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 and he's trying to, he's shaking the tree and seeing and seeing what's going on, right? And I really do think that the reason why Trump is obviously being very aggressive around tariffs is because he wants the market to be very, very uncertain, because he wants to push people back into safe assets. Now, how do you get people to go back into bonds and obviously into, let's say, precious metal, gold or whatever? So you would obviously impose a lot of tariffs. People start to get scared. They'd start to go back into, obviously, these safe havens. Now, as more and more people come into bonds, as the bond price starts to go up, the yields start to come down. So the US government has about $36 trillion in debt, of which about 40% of that debt needs to roll over onto the current rates. Now, the current rates are 4.3%. Now, if this debt rolls over onto 4.3% interest rates, the US government is in a very, very, very tricky position. Now, it would be in the best interest of the US government that rates started to come down. Now, rates are not just going to come down because the US government says to the Federal Reserve, please lower rates. The Federal Reserve has a mandate for price stability and employment. And basically, because unemployment is not significantly going up and because inflation is relatively sticky, the Federal Reserve doesn't really have the, let's say, the interest or the incentive to actually reduce interest rates, because if they do, it would look like they are trying to prop up asset prices. And as a result, obviously, they're in a bit of a tricky position. Now, obviously, I can probably imagine that they do really want to lower rates. And I think it's going to be very difficult because they have this mandate. Now, what Trump could do is he could scare the market to rush back into bonds. And obviously, with everybody rushing back into bonds, we'll start to see the yields obviously starting to come down. And obviously as well, if we saw a lot of, let's say, volatility in markets, the Federal Reserve would typically come in, especially if we start to see unemployment start to pick up. So again, I do think it's very, very, very intentional. And yeah, also as well, I just want to highlight that I'll put this on the screen now, but back in December, I was basically discussing how the S&P 500 was following these trend lines all the way back to the year 2000. So these are trend lines going all the way back basically 25 years. And the S&P 500 was basically using them as support and resistance. Now, in December, we were basically coming up to, let's say, we were basically coming up to a resistance area. Now, at the time, I didn't really say this in the video, but I was taking out a 3x leverage short position on the S&P 500 as well as on NASDAQ. Now, obviously, obviously my thesis was just in relation to these trend lines and also in relation to the US government, how the US government basically needs to reduce the interest rates. And obviously, if interest rates come down, there needs to be a reason why them interest rates come down, not just because, oh, we need the interest rates to come down. Please, 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 please lower interest rates. They're not going to lower the interest rates unless there's an event. And that event, they need to create the event and need to create the illusion. And that was pretty much my overall thesis. Now, I know some people will be saying that it was absolutely garbage, and I understand, right? But I was taking out the short position just in relation to insurance and just hedging out the portfolio. Now, this is also the Fibonacci retracement of NASDAQ. Now, I've mentioned this before. I mentioned this before on Instagram, which is just to give some people more context in terms of what this actually is. A lot of traders actually use Fibonacci retracements in terms of support and resistance. Now, it's not an exact science, but you can kind of see on the chart that there's a lot of, let's say, resistance around these, let's say, Fibonacci retracements. Now, the reason why I think it's very important to pay attention to is because there's a lot of algorithms what trade based on these technicals. Now, just because obviously it actually happens as it happened because it's a Fibonacci retracement, who knows, or has it just happened because a lot of algorithms are programmed to buy and sell at these levels of resistance and support, who knows. But obviously during December, I was kind of obviously shorting into NASDAQ, and obviously there's a lot of volatility and there's a lot of chop, but yeah, obviously at the moment I am doing relatively okay on that short position, but yeah, I mean, obviously this is just me just documenting my thoughts just in relation to what is currently going on. Now, I do think that the NASDAQ and the S&P 500 will go lower. And again, just going back to it, I think a lot of it is to do with the US government in relation to their national debt, how they need to get these rates down. And you need to fabricate a event to obviously reduce the rates significantly. And I don't think they'll be doing that slowly. I do think they will probably need to be doing this sooner rather than later. Now, in relation to economic data, I'll put this on the screen now. So this is what is coming out this week. So on Thursday, I mean, we've got a lot of things going on this week, to be honest, but basically the main things is that on Thursday, we've got the initial jobless claims, what is going to be a big, big thing a lot of people will be talking about. Also, as well, on Friday, we have the unemployment rate. We also have the government payroll. We have non-farm payrolls. We have the Fed chair talking. We have a lot of things going on this week. From an economic standpoint, from a company perspective, we don't really have that much things going on. I mean, obviously, there's a few companies who are reporting earnings this week, but not really that much. But the week after, we do have a lot of things going on. So we do have Delta Airlines. We have a lot of banking companies, obviously BlackRock, JP Morgan, Wells Fargo, Bank of America, Citigroup, Johnson & Johnson, Morgan Stanley, American Express, Netflix. We've got a lot of things going on. And obviously, a lot of this is all in relation to banking. Now, if there is any negative news or negative press about these earnings from Bank of America, from BlackRock, from JP Morgan, I mean, I was kind of touching on Bank of America a few months ago, just in relation to balance sheet impairments on their real estate portfolio. Now, obviously, if they start to realize these unrealized losses, that could be absolutely detrimental to Bank of America. Now, who knows? I mean, I am just speculating, right? And obviously, please just take into consideration that I do have a short position. I mean, it's not a very large short position, to be honest, but I'm just using it as insurance. But the reason why I say that is because I am fully aware that obviously you've got confirmation bias, right? And obviously I could just be talking about information what just obviously confirms my own bias in terms of the market going down. So please do your own research and please do your own assessment. This is just obviously just me documenting my thoughts. I have no idea if this is going to be correct over the next couple of weeks and months. But obviously I just wanted to kind of do this video to kind of showcase how I'm thinking, what I'm thinking about the markets. I'm still very, very, very optimistic about Bitcoin just in general, just over the next 5 to 10 years. But obviously where things go in the short term, who knows? It's a very, very speculative space, especially for a lot of different people, right? So anyway, that is just how I am viewing markets. Now, obviously I'll be documenting everything on DC Economics on Instagram. And like I was saying, I do really appreciate your support on DC Economics Instagram and obviously on YouTube. And yeah, to the 4 people who keep on supporting me, I hope you're having a lovely day wherever you are, whatever time it is. It's currently 3:30 in the morning. And yeah, take care. Bye-bye.